Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Joining me on the podcast today, we have JP Nicols, the co-founder and managing director of FinTech Forge and the host of Breaking Banks. You may have seen JP up on the Finovate stage. He's been up there several times previously. JP, thanks for joining me.
Oh, my pleasure.
So what we wanted to talk about today is kind of the relationship between fintechs and banks. And I know you do a lot of work with FinTech Forge, talking to a lot of bankers. Can you talk about what work you're actually doing there and kind of how you come into contact with this group of bankers who are so difficult to predict for a lot of fintech innovators?
Oh, sure. I spent 20 years helping to grow a $6 billion bank to a $400 billion bank. Today, that's known as U.S. Bank. And I was lucky enough to be a part of the team that really built the first enterprise innovation program. And that was back before innovation was a word you'd probably use to describe U.S. Bank, which you would today. And, Jason Henricks and I formed FinTech Forge to help financial institutions of all size build and leverage their own innovation capacity, whether that's internally or through strategic partnerships and investments in fintech. And one of the things that we've been working on over the last year and a half or so is the Alloy Labs Alliance. It's an innovation consortium. We started in the end of 2018 with 12 banks that agreed to work together and kind of share ideas and best practices. And today we have over 40 members, totaling over $180 billion in assets, reaching over 20,000, actually over 30,000 now, 30 million. I'm not very good at zeros here, Greg. 30 million consumers.
Yeah, you're only a banker. I mean, come on. How long has it been?
Oh, come on. What's a few decimal points? 30 million consumers and 6 million small businesses. And yeah, we've seen a lot around this whole idea of what we call an innovation maturity curve, where, even though we've been talking about this for a decade and a half now, there are some that are leading, some that are, we think in terms of leaders, learners, and laggards. And there are still banks in every one of those categories today.
Yeah, I mean, on one hand, it's great to see even getting up to 40 banks who are kind of raising their hand and saying, we recognize that this is a problem. We need to learn more about it. I think is something that, even 5 years ago would have been kind of difficult to imagine. Obviously, you've been beating the drum, up on stage and through a lot of your other work, telling this community you need to make some digital transformations or you run the risk of extinction. How have you seen kind of bankers responding to that message as it's become more mature, as you see more people really starting to engage?
Well, it is less weird a message. I'm certainly not the only one beating this drum anymore. I think most of the people on your show and the people that we have on Breaking Banks are beating the same drum. It's not such a weird message anymore. Maybe a decade ago, I had people really question, what am I even talking about? What do you mean change? We're not seeing any change at all. And it's starting to become more visceral. One of our founding members, Julie Thurlow at Reading Cooperative Bank, she talks about it really hitting home for her. She wasn't unaware of fintech, but she watched a Super Bowl ad a couple of years ago for SoFi. And while she was sitting there, grabbed her phone and said, oh, is this really true? Can I really do all that in a few minutes? And she found out that she really could. And so it was a great eye-opening moment for her. There's another bank that we worked with. We spent significant amount of time with their senior leadership team putting some things together. It was moderately engaged. And then they went off to some conference somewhere and saw a bunch of demos. And I don't know if that was Finovate or some other conference. It was unnamed. Let's say it was Finovate.
Yeah.
Well, it must have been. Then suddenly, it became visceral for him. And so it was good to see. But having said that, while the message is accepted and people are doing something, I still think there are a lot of banks that are still having trouble getting out of their own way.
Yeah, and I think that's certainly the case. And as much as it's good to see some progress happening and see people getting those kind of, more visceral, more emotional responses to things that they see. And I think Super Bowl commercials are really one of those measuring sticks. If it shows up there, then it's really kind of made it into pop culture, become kind of part of the general consensus, the general knowledge base. But we talked a little bit before we got on, before we push record here, about the hype curve versus the adoption curve, and that really seems to be kind of what we're talking about. We spent a lot of time in the past decade really in the hype curve, looking at people who are doing amazing things and building amazing products. And for a long time, a lot of those products didn't really seem to go anywhere. And now it seems to be the case where they're starting to make it up into more traditional banking establishments, into the general population's knowledge base. And so, of the companies that you're talking to, of the banks that you're talking to, would you agree with that? That this is something that more and more people are starting to become aware of, or is it still, I know I need to be at this table, but I'm not sure what I should actually do about it yet?
Yeah, a lot of the latter, and I'll say two things. One is, yeah, you talk about the hype curve. Gartner popularized that 25 plus years ago now, and the beginning of the hype curve is about an innovation trigger, right? It is some sort of capability is now available, and so then the peak of inflated expectations is that people are all super excited. And take where we were with Bitcoin, maybe 2.5, 3 years ago. It was going to solve all the world's problems and make all of us rich too. And now we're the way Gartner draws the hype curve, it dips down to the trough of disillusionment, and then eventually, though, if the things don't drop out completely out of sight, it goes up a much lower slope curve that they call the slope of enlightenment. And I think many of the technologies that you have debuted on the Finovate stage are probably in those latter stages now. And what I think about is exactly what you said, the difference between the hype curve and then the adoption curve. And that actually goes, way back to the 1950s, 1957, I believe Everett Rogers developed the adoption curve. And you've seen this before. This is where we talk about, the innovators and the early adopters, and then the early mainstream and the late mainstream, and then the laggards. And so people adopt technology or not. And, those are human beings that are CIOs and CEOs of banks that decide whether they're going to adopt this technology or not. And then there's that third level behind that. It's the consumers who actually really are starting to demand these things from their banks. So consumers that are now pushing a button and getting a ride from point A to point B wherever they want, or having merchandise delivered, or content delivered, right to their device instantaneously. They're demanding of the banks that they are more aggressive in adopting the kinds of technologies that consumers are experiencing elsewhere in their lives. And so it's really the connection of those two, because you can have the greatest technology in the world, but if there isn't a sufficient market to adopt it, it's really not going to go anywhere.
Yeah, well, and I think you look at those things and they all seem to be positive signs for the industry, right? And it's nice to see that forward momentum. But I think from a fintech innovator standpoint, they still experience this kind of difficult piece where they need to, if you build an interesting piece of technology, you still need to try and get it in front of the right people. And now that there's starting to be some more of this adoption, some more people focusing on this, does it change the way that innovators should be approaching banks? Any advice you would have for anybody who is coming out with a new product in 2020, a new innovation in 2020, and saying, I need to get this quickly in front of a lot of banks and start to get some customers on board and scale up?
My number one piece of advice, if you're a fintech innovator and you're building, you've got a capability, and what you're trying to do is build a product and eventually a company. And those are different things. And so if you haven't, you have to read Crossing the Chasm. That's Jeffrey Moore's 1993 seminal work. And I have read everything Jeffrey Moore has ever written, I think. But he really talked about, let's go back to that adoption curve, those innovators and early adopters on the left tail of that curve. What he said was, once you get past that, there's a chasm before you get to that early mainstream. And so what happens is many of the bankers who attend Finovate and other shows like that, and they're very interested in seeing brand new capabilities nobody else has. And that's great for getting them to adopt your early stage company or your early stage technology. But for many banks, they alone can't get it done. And you need to be able to address people on the other side of the chasm, because most bankers are wired exactly the opposite of that. And what Moore talks about is people left of the chasm are looking for a massive upside gain. And in exchange for that, they'll take a modicum of risk. And people right of the chasm, and the further right you get, the more true this is, it's exactly the opposite. We're looking for zero risk. And in exchange for that, we don't expect much upside. And so the reality is many, many bankers are, A, want to keep their job, B, hopefully earn a bonus this year, and, keep their boss relatively happy. And so that's where phrases like, hey, nobody ever got fired for hiring IBM come from. And so you need to realize the folks inside the bank are really coming at various points around that whole spectrum.
Yeah, well, and I think there's certainly something, this is kind of counterintuitive for an innovator's mindset who would basically say, I want to do the coolest thing possible, right? I want to try and push my technology as far as it can go. But I think, to paraphrase what you're saying, that if you're going to be successful at approaching a lot of these banks, you have to be really conscious of the risk that you are potentially exposing these banks to, and not only be able to mitigate that risk, but be able to come in and speak to that mitigation of risk, so that when you're talking to a banker, when you've got, that kind of crucial 3 minutes of somebody's attention, you have something that you can tell them where you can basically lay that case out. I can offer you these amazing things, and also I need you to know that there's very little risk for you if you choose to adopt it. Because I think that is an area where a lot of innovators struggle. A lot of them focus on, here's what I can offer, and not many of them come back to that other side of it, or even think to address that side, although it is obviously crucially important.
Well, I think the number one thing is make sure you're solving a problem that somebody cares about. So, somebody who has budget, authority, need, and timing to say yes to your solution. Make sure that this amazing technology, and don't stop pushing the envelope, by the way. We need you thinking really big and wild and finding those crazy ideas that no banker would probably ever think of. But if you want to sell to a bank, then you need to align it to solving a problem that they care about. And then you're right, the risk management, risk mitigation part is important. Hey, that's my gong.
There's your gong. There you go. I think that might be the first time you've gotten the Finovate bell, but everybody on the podcast gets the bell. No, I think this has been really interesting. And, just to kind of tie a little bow on it, I think you're spot on that we need to encourage innovators to continue to push the envelope. I think that's a crucial piece. And that's something that we at Finovate really see a part of our responsibility to the industry, is kind of highlighting this, what's possible, and showing what's possible out there. And then to your point, it's up to innovators to kind of take it to that next level, take the innovation and turn it into a product that somebody wants, that solves a real problem, take that product and turn it into a company. And that's a completely different and very difficult path to walk, which we've talked about a little bit previously with some other guests. But, I think this is, and then being able to speak to that mitigation of risk is something which, again, not a lot of innovators are necessarily comfortable doing, but they probably need to get more comfortable at it, so that when you present your lofty and noble ideas, you can kind of fight away that demon that inhibits a lot of fintech adoption. So, well, thank you again, JP, for being on the podcast. I'm sure we will be connecting again before too long. It's always a pleasure chatting with you, and I look forward to the next conversation.
Well, thanks. Likewise. And now that you're through the European show and you've got the US shows coming up, why don't you come back on to Breaking Banks and we'll dig into this even a little bit deeper.
It's a date.
Sounds good.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.